morning, everyone. Welcome to MPC Markets Morning Call, 29th of July, 2025. Stocks closed mixed ahead of Mag7 Earnings and Fed meeting. We've got a lot going on later on in the week. As I sort of suspected last Friday, we're going to probably have a pretty quiet couple of days here. As you can see, Nikkei sort of has headed higher, but apart from that, really, we've got most of the indexes up or down well under 1%. Aussie market drifted off yesterday. It's pretty flat for the week. Nasdaq was slightly down. Dow finished slightly up. Really, we were just saved by the Mag7 overnight. As you can see here in the market map, the broader market very weak. Healthcare, utilities, anything in that finance section there really in the red. We had some of the services, technology services there, making a bit of a bounce back, but they were sort of drifting over the course of the previous few weeks. Nvidia up there, AMD, and a few of the chip stocks overall, and Tesla just whipping around really in its range. Energy stocks up slightly overall. So we're waiting on a bunch of different things to happen here at the moment. We've got the US-EU trade deal. This is, getting very close to being done. There's some sort of framework being agreed, including $750 billion in energy purchases and $600 billion in investments in the American economy. So this has stabilised markets somewhat, especially with the reciprocal tariffs set for August 1. Analysts are cautioning, though, lack of any written agreements means that there's still a lot of uncertainty. The Fed Reserve also commencing its two-day policy meeting. Rates are expected to remain unchanged in the 4.25 to 4.5 range. Investors are watching for signals for any rate cuts later in the year, and particularly hints towards a December move with the dot plots, etc. So alongside the Fed, the Bank of Japan's also holding a pretty pivotal meeting this week. We've got June PCE index, which is the Fed's preferred inflation measure, and some pretty key labour market data, JOLTS, jobs, which is the private sector, ADP payrolls, and then obviously the big dog payrolls on Friday night, which will be watched very closely because they're very much a leading indicator in terms of the economic activity. And we're looking here at commodities. They're drifting off a little bit. US dollars drifted slightly. Silver's off somewhat for the week, but fairly flat overnight. Gold was flat overnight. Copper making another bounce there, up 2.85%. But we're largely fairly mixed. Lithium, yet again, a massive jump there for HLIT, which is the lithium miners ETF. And uranium as well, jumping a couple of percent. So that mining to energy sector still looking fairly strong overall. And we will probably see, all eyes on the GFEX, which is the Chinese futures exchange, to see what lithium does around about the sort of 11 or 12 o'clock mark in our market here today, to see if those lithium names continue higher. But this is what we're really looking forward, and the whole market's on hold for, really, is we've got Microsoft and Meta there on tomorrow night. We'll get that around about this time tomorrow morning. We've got a bit of an old calendar here. Apologies for that. Amazon's out on Thursday the 31st, which will be Friday morning as well. We'll have the FOMC meeting Thursday morning as well. So you'll get the results of that around about sort of 4 a.m. GDP out tomorrow night as well. So, and then obviously our Aussie CPI. So yeah, we've got some big numbers coming up. I don't imagine. There was very little out overnight. But we've got a fair bit out tonight, obviously, with Procter & Gamble. You've got some of the AstraZeneca, Merck, there in the healthcare sector. You've got Starbucks and UPS, Spotify, Boeing, etc. there. So, and United Health Group, which, God save it, it's had probably one of the roughest half years of many companies, and I don't think even a good result's going to really save that overall. So, yeah, we everything's very much stacked at the end of the week. So today will just be, people getting either taking some risk off or putting some risk on overall leading into that because the whole market could dramatically change come, with all of those, Federal Reserve meetings or central bank meetings from Canada, Bank of Japan, and the Fed. Fed inflation numbers, massive employment number, Australian CPI, advanced GDP, 4 of the Mag7. I mean, you'd be mad to be putting on massive positions leading into this because by Friday, realistically, this entire market could be ultra bullish or ultra bearish, depending on whatever these numbers come out. So it very much is a time to be, getting rid of the stuff you don't necessarily need. And possibly just focusing on the next phase, given that we're coming into seasonal weakness overall. So have a look. My best recommendation would be have a look through your portfolio, and maybe those things that have rallied that you're not so sure on leading into this just general seasonal weakness that is August, September, October region, and get rid of those, have some cash available, and then you can happily buy into some of the weakness if it potentially happens, which by the looks of things, I would imagine with the amount going on in the market as it stands at the moment, I really can't see this holding massive ground. We still haven't got trade deals done realistically. They're coming, but they're going to take time, which means tariffs are going to be applicable, which is going to feed through to inflation. There's been a lot of companies announce job cuts, and we still haven't seen any effect from those job cuts come through into those employment numbers. And obviously, we're not getting rates down immediately from any of the central banks either. So any sort of remote positivity that comes out of these Mag7 names over the coming days is potentially short-lived because, whilst they're a very large part of the market, they're not the entire market overall. So I would say caution is the best path forward leading into August, and I'll bring some seasonality numbers for you guys in the podcast over the next couple of days to explain sort of what I'm talking about. But September is actually the only negative month on average for the S&P. I think it averages down at 0.64 or thereabouts, and I think it is negative over half the time. So I'll bring some context for you there in the podcast to come if we've got time with the Mag7 earnings, etc. But that's it for today. A quick one. Have a safe day and a good day, and we will speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.